Warren Buffett, the most successful investor in modern history, is sitting on $189 billion in cash. Not stocks, not real estate, cash. For a man who built his fortune by buying when others were scared, that's a bold statement. Because when Buffett stops buying, the world should start asking why. Every year, his Berkshire Hathaway conference turns into an economic sermon. But this year, the crowd didn't leave inspired. They left uneasy. Why? Because Buffett may have just quietly warned America of an approaching crash without saying a single word. Berkshire Hathaway's cash pile has ballooned to $189 billion, the largest in its history. That's more than the market value of Disney, Nike, or McDonald's. And here's what's wild. Buffett's earning 5.4% on short-term U.S. Treasuries. That's easy, guaranteed money. Yet he says the yield doesn't even matter. Whether it's 1% or 5%, he's keeping that cash right where it is. When asked why, his answer was blunt. We just don't see anything attractive right now. Translation? The man who built an empire spotting opportunity everywhere doesn't see anywhere worth buying into today. That's not cautious. That's a red flag. Back in 2001, Buffett created what's now called the Buffett indicator. It measures total U.S. stock market value compared to the nation's GDP. When the market's worth far more than the entire economy, you're in dangerous territory. Right now, that ratio sits around 199%, nearly double its historical average, and higher than the peaks of both 2000 and 2008. Put simply, the market is priced for perfection in an imperfect world. And when even Buffett's own gauge screams overvalued, he listens. There's another warning light flashing, one that's predicted every major recession since the 1970s. The 10-2 Treasury yield curve. For more than 630 days, it's been inverted, meaning short-term bonds pay more than long-term ones. That only happens when investors expect trouble ahead. History shows, when that curve flips back above zero, the recession usually follows. And right now, it's still deeply inverted, the longest stretch in 50 years. Buffett knows the pattern. He's not trying to time the crash. He's simply waiting for gravity to do its work. Buffett rarely speaks in panic, but he speaks in code. At this year's conference, he said quietly, "Things aren't attractive right now, and there are certain ways that could change." That's vintage Buffett. Calm, measured, but crystal clear. When he says things aren't attractive, what he really means is prices are too high and risks too low. He's trimming positions, especially in Apple, and stacking cash. The same playbook he used in 1999 and again in 2007. Both times, right before massive market corrections. CNBC analysts picked up on it fast. Bill Smead from Smead Capital said, "This is the most bearish Buffett's ever been." And he's right. Every indicator shows Buffett's bracing, not betting. He's not chasing momentum. He's waiting for value to return. He's been here before, 1969, 1999, 2007. Every time the market overheated, Buffett went quiet. And when the dust settled, he came back swinging, buying companies for pennies on the dollar. This is his rhythm. Retreat when everyone's euphoric, attack when they're terrified. After 2008, while the world burned, Buffett bought Goldman Sachs, GE, and Coca-Cola shares at bargain bin prices. He's not waiting because he's afraid. He's waiting because he knows history repeats. And patience prints money. Be fearful when others are greedy, and greedy when others are fearful. Right now, everyone's still greedy. Buffett? He's just watching. Look beyond Wall Street and the signals multiply. Corporate debt at record highs. Tech valuations inflated beyond fundamentals. Retail investors still piling into meme stocks, when even Buffett, the ultimate long-term bull, can't find value. That's not pessimism. That's reality catching up. His cash isn't panic money. It's dry powder for when the rest of the market starts screaming. So here's the truth. Buffett's not predicting disaster. He's preparing for it. He's waiting for the overpriced to become affordable again. And when that happens, you'll know it. Because the moment Buffett starts buying big again, that'll be the sign the worst has already passed. Until then, he'll sit on his mountain of cash, patient, calm, and ready. The biggest fortunes in history aren't made during the good times. They're made after the crash, when everyone else has given up. Buffett's silence is his signal. He's not warning the world with words. He's doing it with actions. The question is, are you paying attention? If you found this breakdown useful, like, share, and subscribe for more real-time market insights and financial truth from BuzzFrame. Decoding the world one headline at a time. Before you go, I want to hear from you. Do you agree with Buffett's cautious approach, or do you think he's just playing it safe while everyone else panics? Drop your thoughts in the comments below. I read every one of them. Your perspective might even end up in the next BuzzFrame video. Because here, it's not just about what's happening. It's about what you think it means.